Just want to talk a little bit about for every chapter, starting with chapter 3, there is an Excel file that you can take a look at, and I've already got it open, but under Unit 2 for chapter 3 it says chapter 3 Excel, and I've got it open right here. And some of these will be more useful than others. In future chapters I'll be doing some calculations and showing you more detail about these. But since chapter 3 has one, I wanted to show it to everybody. And it's just, you kind of just read through here this main tab. It says using is optional. For some chapters I use them more than others, but I always make them available to everybody just to take a look at on your own. And what they do is they show us some more detailed information than what's on the PowerPoints. They usually include some pictures of these in the book also. So when you actually read chapter 3 itself, you'll see that there is a lot of information about allied food products. That's the example they follow. This is the same data that's used in the chapter for allied foods, and so just showing you some information: the stock price, shares outstanding, the tax rate. They show you a comparison of the financial statements, the balance sheet between 2 years, both the assets, liabilities, and equity. Then they show you the income statement for the 2 years of the company. You can see the two numbers there. They show us the various components: the EBIT, the interest, EBT, and net income. They show us the dividends and then additions to retained earnings also. And they do some per share data down here also: common stock price, earnings per share, dividends per share, and book value per share calculations. Then they show us, after that, the cash flow statement. A little bit more detail than the cash flow that the PowerPoint used for DeLeon Company. And you can see here we've got the cash flow from operations. I had a small negative as a result of that. Cash flow from investing, cash flow from financing, and then just the change in cash between the years. Cash is $10,000 at the end of the current year. Statement of equity, basically how did my retained earnings change throughout the year, and you can see that retained earnings was $750. It went up for net income, it went down for dividends, net increase of 60, and you can see how that worked. And also the free cash flow calculation for the companies right here. So the EBIT times 1 minus the tax rate plus depreciation minus capital expenditures plus the change in working capital gives the free cash flow calculation for the company right there. Just wanted you to see that. Just really informational for chapter 3 more than anything else. Some chapters we're actually going to go in here and do some number crunching, and I'll tell you when that is for sure, but just wanted to get you started with chapter 3 and just a little bit about the Excels.